guys, it's Coach Brad here with another tip for your business. Today we're looking at my favourite subject, well maybe not, profit and loss statements. But what I want to do with you today is show you a new way to look at your profit and loss from a perspective of something I learned from Keith Cunningham. Now, if you don't know who Keith Cunningham is, he's Rich Dad. You've probably heard of Rich Dad and Poor Dad. Well, the guy who wrote Rich Dad, Poor Dad, Robert Kiyosaki, had Keith Cunningham as a mentor for a while. So Keith Cunningham is the Rich Dad. Anyway, this is where I learned this particular strategy. Now, by now you will have watched the profit and loss video and you're probably pretty good at that. If you haven't, go back and take a look at it now. But on the profit and loss statement, just a quick recap. We've got sales that come in minus our cost of goods gives us our gross profit. So this is sometimes called contribution margin as well, but this is what we have to run the rest of our business with. Then we have our fixed expenses or overheads. And all these different line items here then make up what it costs to run our business, giving us a total, and then our net profit is what's left over. Just to quickly recap, so a cost of goods sold is a cost we incur when we get a sale, and a fixed expense is a cost we incur whether we get a sale or not. Okay, so what I'm looking at today is the fixed expenses. Now, Keith says that one of these items here, or all of these items here, they don't deserve or get to be on your profit and loss unless they do some certain things. And the question you need to ask yourself is, does this line item keep me a client or get me a new one? All right. And what I'm going to show you today is how you can start to look at that from a different perspective. So using the break-even formula and how we do break-even calculations. So how much sales must be generated to cover the cost when we do some kind of activity, whether it's advertising or put a new employee on or maybe get a new machine or whatever it is. Go back and watch the break-even video if you're not sure how to do that. But I want to apply that here. So let's pretend that each one of these line items were a worker for us. And they had to either get us a client or keep an existing one. So the first thing we want to do is look at what the break-even sales point this person must generate in keeping a client or getting a new one. And the way we do that is let's start and look at accounting and legal fees. Break-even is your investment divided by your gross profit. So if you guys haven't had much experience with Excel spreadsheets, then I'd suggest you need to do some learning. This is one of the most powerful things you can use in your business. So I've got a sample P&L here, but you can export it from most good accounting software and export it into an Excel, so you can get it to this format. So now we've exported it. Now we're going to do some manual manipulation. So to do that, we take this cell here and let's say equals, and I want to work out the break even for advertising. Oops, let's go back. Advertising and legal. So we take this here, this cell, and I'm going to divide it by our gross profit percentage. So in this instance, it's doing the calculation, thinking. The break even to cover this cost is $20,390. The question is, does having this line item here keep me a client or does it get me new clients? And again, this is something you've got to ask yourself. So what I'm going to do is repeat that exercise for all of these line items here. Now, the best way to do that is to drag it down, but there's something we've got to do to this formula first, and this is a handy little trick. As you drag it down, it would normally drag all of the formulas down with you, but we want this one to stay fixed. So we could either change it here, and we do that by what I call nailing it down by putting $1 and $1 between the cells like that. And that means that as I drag it down, that will stay fixed, or you could just put in the 57.3% in your formula. So here we go. Let's drag it down. And there we go. Going to need to widen this a little bit. So again, you ask yourself the questions. Does my advertising get me a client or keep me a client? So obviously it's getting clients. But the advertising needs to be bringing in $26,000 worth of sales. And you go through the whole way looking at it. Now, just to recap, you'll notice from your break-even calculations that if we then look at each of these individual items, we can start to get a bit of an idea on whether or not we're actually going to be hitting our targets. So, and whether the line items are working or not. So a slightly different way to look at your P&L. Try it out for yourself, export your P&L and go through it and just look at these things. So this one here, I look at this and go, interest and bank charges. Well, does this keep me a client or get me a new one? So when you look at the money or whatever it is that you've got the interest for, you've probably got some sort of a loan. Does it keep me a client? Well, if it's helping me keep the business running, then yes, it's actually helping me keep a client. But anyway, so a slightly different perspective. By now, you've probably already been through it and had a look at the percentages of each of these elements here. So I'm going to do that just quickly now to show you how that works as well. So we always reference back to sales. So if we say equals accounting and legal fees as a percentage of our sales, in this instance is $1 million. So it is 1%. Change that to a format for percent. And I'm going to nail down that figure again and quickly drag them through and have a look at them. So there you go. So we can look at what percentage of each of these elements here makes up of our overall. So wages and salaries is always the first place I look, and vehicles also. So they, in this instance, look pretty low. If your wages get above 30%, you need to be a little bit concerned. And then, of course, you could take it down to your net margin down the bottom as well, or your net profit. So this business has a net profit of 9%. Not real healthy. Maybe they need a coach. So there you go. A slightly different way to look at your profit and loss statement. Hopefully you found that valuable. And remember, asking yourself, does that line item in fixed expenses either keep me a client or get me a new one? Thanks for listening. I'm Brad Flynn, and we'll catch up with you soon.